Londra'dan herkese merhaba. Küresel görünümle karşınızdayız. Aslında dünyada piyasalarda büyük resmi ve yansımaları konuşurken özellikle piyasalara özel bir parantez açalım. Bütün bu gelişmelerin önümüzdeki dönem için ne anlama geldiğini değerli bir yayın konuğumuzla konuşacağız. Simon Quijano Evans'la birlikteyiz. Kendisi Ekonomist. Simon, welcome to our show.
Morning.
The Iran war actually has become the biggest game changer for global markets in the first 5 months of the year. Even if the war ends, can markets ever fully move on from this story? What do you say? Because you know that many analysts say that even with a deal, tension in the region will continue. And do you think geopolitical risk premium are now structurally higher for global markets from now on? What do you say?
Yes, I think it's a very interesting question because when you see and look at markets, equity markets, they've been reaching record levels in the United States. Other equities haven't done too badly. Everything's obviously focused on AI. But there is a real dislocation, I think, between those, the big seven in the US, and the rest of the world. And I think when hopefully the Strait of Hormuz opens, there will be a general reassessment from everyone, whether it's corporates, whether it's financial market participants, whether it's governments, and indeed whether it's central banks. And I think that if we see an opening and a solid agreement, then that risk premium will drop quite substantially. But then we all have to deal with the higher inflation, and that's not going to go anywhere soon.
Mm-hmm. So the higher inflation is the sum of this all the result of this war, and we have to deal with that. You say that if a deal is reached and the Strait of Hormuz really opens, how long do you think it would realistically take for energy markets, for example, the shipping flows and investor confidence also to normalize?
Well, I think if we look at Brent oil prices, for example, in the last 2 weeks, depending on the news that's coming out of the United States, out of Iran, out of Pakistan, for example, then you've seen quite a lot of volatility. And I think if we were to get an announcement of a deal, we could see a strong $10 drop in oil prices quite immediately. That would be my first assessment. The next question then, as you say, is how long does it take then to start getting this oil out of the Persian Gulf to the rest of the world? And as we know, there are many ships still in the Persian Gulf, so they would have to go out first. The others would have to come in. This is going to be a massive operation. And I think the whole world is looking to really ramp up that supply. And let's not forget, countries like China and the United States still do have reserves, and China particularly has huge amounts of stocks in big reservoirs. So I think there could be some rebalancing which could come relatively quickly. And when I'm saying quickly, maybe over a period of 4 to 8 weeks.
Mm-hmm. Because last week, the International Energy Agency chief Fatih Birol said that the energy markets are very close to the red zone if Hormuz is not fully opened. Even if the war ends, do you think the Hormuz Strait will open properly? And what kind of an environment, for example, do you think the countries in the region might get affected?
I would assume that the messages coming from the rest of the world to Iran are get this strait open. Because, as you say, the danger is that this starts to cause massive energy prices high still for the rest of the year. We see inflation pass through. We see populations getting unhappy with the situation. We see central banks have to hike rates across the world. So my assumption would be that this would happen quickly and that we would get a proper agreement in place. But again, we don't know. And this is all based on assumptions, and markets have been trading on assumptions in the last 3 months, essentially.
Mm-hmm. What kind of a new economic order might we see after this Iran war? What do you say? Because some say that Strait of Hormuz will have to be replaced, for example, with new ways of moving this energy forwards.
Well, I think what we're going to see is many initiatives to start building pipelines in Saudi Arabia, UAE, for example, to go across to the West, as we've seen being used at the moment. The question of Fujairah, where UAE has a pipeline, is also an open question because Iran actually de facto blocked that port as well. So there has to be, I think, China, the European Union, the United States, of course, as well, need to get some agreement together that we need to see how we plan our security, our energy security for the next 5 to 10 years. And we cannot rely on just individual suppliers. And let's face it, for the European Union, the only solution, and also for Turkey, the only real solution is to go into alternative energies. We're talking again about wind, we're talking about solar energy, we are talking about hydro energy, we're talking even,
Renewables.
yes, renewables, and even things like green hydrogen, which I think is still quite far away, but has to be spoken about.
Mhm. So, what about oil in the short run? For example, do you think $100 will be the new normal, or are we going to see the levels below $100
If
if
it
the war
gets
ends?
Yes, if the war ends, the Strait is opened, I can see a jump down to $90 per barrel on Brent quite
Mhm.
immediately. Then we would obviously need to reassess the supply chains over the next several weeks. But let's face it, with global demand probably falling and countries like, well, the United Arab Emirates leaving OPEC, and also other dynamics playing here, I think there'll be a desire to increase oil supply and get it out there, which in itself, from the supply side and from the demand side, would obviously push oil prices further down.
Mhm. So on the one hand, we are following the Iran war and what's happening there, and on the other hand, we have this Russia-Ukraine war, and it is also continuing in its fifth year. So there are some signals that we might be towards the end of that war as well. Do you think we might get through a period where the two wars end simultaneously?
That would be the ideal and dream situation, let's face it, for the whole world, and especially for Ukraine, which has been facing this onslaught for several years now. We've seen many meetings between the leaders of Russia, of China, of the United States, of different stakeholders in the region. I think everybody should have a desire to seek peace and to get on with the things that we really need to deal with. And let's face it, if they don't, then populations will make their sentiment felt at some stage, and there will be a reaction from populations. And we saw in the last 1 to 2 years already the countries which have lower age populations, younger populations in inverted commas, are the ones that react the most. But I don't think it'll be restricted to that.
Mhm. Some say that when you look at the Iran war, what's happening in Russia, Ukraine, what's happening between US and China, and what's happening in US and Europe. These are not only geopolitical risks, but this is far beyond the global reordering. We are seeing a new order in the global power dynamics, they say that. When you look at the big picture, what kind of a change do you see in that perspective?
I think we are seeing chaos politics and rather a global disorder than a reordering or order. And really, it is up to leaders now to decide whether they want to continue along this path or to reset it, as you may be saying, and try to find a way where we can, a modus operandi, where we could all work together. And this is maybe too idealistic, but that would be the ideal situation. And it would start to help the economic backdrop, which in itself is not easy. And AI in itself, many governments are still, I think, ignoring this to a certain extent, is going to make huge changes over the next 6 to 12 to 18 months, which I don't think, are really prepared for. And I'm not only saying the negative side, but also the positive side. And a lot of people have been focusing on white collars, but this can hit every sector of the economy. So I think we need to start preparing for those things rather than focusing on geopolitics, which takes up too much energy and time.
Mhm. When people talk about the biggest risks facing markets today, they usually mention inflation fears, rising bond yields, AI bubble, and risks surrounding actually private credit funds. What else would you add to that list, and which risk do you see as the most dangerous one?
I think for the world in general, from an economic perspective, I think that any Federal Reserve rate hikes, which I mean, the market's pricing in one hike towards the end of this year, but I think that can jump And that would be one big risk that everybody, and especially emerging market central banks, will need to deal with. I think in emerging markets in general, it's not geopolitics, but domestic politics, which may take the upper hand. We have a number of elections, for example, Colombia, Brazil. There's the big question about when the election in Turkey may happen. And there are a number of other political backdrops which are perhaps risky in other countries. So I think those perhaps would be the two focal points at the moment.
As you mentioned, when we start this year, everybody was talking about emerging markets and emerging markets as the stars of the markets, you know. But after this 5 months period, what do you say in general for the Emerging Markets League? What is your top 5 in the emerging markets, and what's the place of Turkey?
So Turkey can be an amazing market to be invested in. And we've seen so far year to date that investors do like Turkey. And when they see a solid policy backdrop, there really are reasons to invest in Turkey. And I think that would be one of my top 5, obviously depending on what happens locally, domestically. I think that we have other countries on the local currency side, for example, like Brazil, would have very high real interest rates that will be supported because of that on the foreign exchange front, on the currency front. Then you have other countries like Philippines, Indonesia, for example, that could be very supported by the opening of the Strait of Hormuz, because these countries have underperformed on the FX side because of this, because they are net importers of energy, and also we must not forget fertilizers. Yes? And we haven't spoken about fertilizers, but this is very important for a lot of emerging markets. So there are a number of mixed pictures out there, and I think looking ahead, we're going to have to be quite versatile in the way we approach it.
Simon, you know, Turkish domestic politics has also become more active and volatile nowadays in terms of market pricing. What will investors focus on most from now on? Politics, inflation, reserves, dollarization risk, growth, or external risks? What do you say?
I think you've named the whole list already. So I don't think there's much to add to that list. I think foreign investors really like the way that policy has been driven so far year to date. The finance minister, the central bank governor have all done an amazing job in Turkey. And the big question will be whether they are allowed to continue along this path over the next 3 to 6 months, which would be ideal for Turkey. And I think the second question, as you mentioned already, is obviously politics and how perhaps the electorate reacts to the latest developments and whether some sort of a solution in inverted commas can be found to continue over the next 2 or 3 years.
Actually, Turkey entered this Iran war period also with very high inflation, and the central bank tightened policy through funding costs, not an open rate hike. But do you assess the policy? How do you assess the policy management so far? Do you think Central Bank of Turkey may eventually be forced into an official rate hike again? What do you expect in June or July, for example?
I think central banks across the whole of emerging markets will be looking into hiking rates over the next 3 to 6 months. And one thing is to be able to also anticipate what the US Fed does. Back in 2022, and let's not forget, the Russian invasion of Ukraine happened in February of 2022. So together with the current conflict situation, it provides very comparable seasonalities. The only difference is that back then, you had food prices, the FAO food price index, the global food price index jumped by 17% between January and April of 2022. This time it's only around 5%. So this time it's really been more of an energy shock, and it becomes a fertilizer shock if the Strait of Hormuz is not opened within the next 4 weeks, because then people have to start thinking about crops later on this year. So as far as Turkey is concerned, I think the central bank, and they said very clearly in their statement, the latest statement, that they will be closely watching developments. If you look through the whole, I don't know, about 20 central banks in emerging markets, the main word that they've used is uncertainty. And now some central banks like Bank Indonesia, which hiked rates by 50 points, basic points, sorry, in the last meeting. You have Philippines also hiked. So they're the two first ones. And this will spread to other central banks as we move ahead.
Mm-hmm. So the thing that I wonder is, could political developments in Turkey influence the direction of monetary policy in the coming months? How serious is the risk of a renewed dollarization in Turkey? Because adding to the political developments, the geopolitical uncertainty in the region and inflation pressures.
The Turkish population itself is probably the most astute investor when it comes to Turkey. They know the country very well, and they know the country much better than foreign investors. So I think, as you say, the question of re-dollarization, purchasing dollar assets will be in focus, not only for foreign investors, but also, as you say, the central bank, Central Bank of Turkey. So they will be closely following all these issues. And ultimately, the most important thing for them is inflation. And in Turkey, unfortunately, food prices, so vegetable and fruit prices, jumped by around over 50% in the first 4 months of this year, which is substantial and doesn't reflect what's happening with food prices elsewhere in the world. And I think this is going to be a challenge also for the government as we move ahead to be able to deal with this. So I think the bottom line is for the government in Turkey and the central bank to work very closely together on this to be able to deal with the higher inflation.
Simon, if you were to name one risk and one opportunity for Turkey, both stemming from this war and from political events and everything, what would you say as a risk and opportunity?
I think that's a very difficult question to answer. The one risk, there are a lot of Turkey has been facing a lot of risks externally in the region, given its geopolitical situation. And I think Turkey has done an amazing job in dealing with these situations. And I don't think anybody understands in Western Europe or elsewhere how difficult it is for the government in Turkey to deal with these situations. So I think that's been dealt very well. Now, as far as risk is concerned, externally, the question of inflation, energy prices is and remains the biggest risk. So I think going forward, these options of alternative energies for Turkey would be very important. Now, I think if we look ahead, then the biggest opportunity is once the Strait of Hormuz gets opened, a country like Turkey, which is a net energy importer, could benefit massively. And then you could start to see, hopefully, food prices coming down and then the situation calming. So I think there are a lot of opportunities still in Turkey, which we must look into. And that's why foreign investors are very closely watching what's happening, both domestically and externally.
Simon, Europe is Turkey's largest trading partner. How badly has Europe been affected by this process? And do you think further, for example, rate hikes might come from ECB? And so what will happen about the expectations for the euro-dollar parity? Because the expectations of rate hikes and rate cuts about Fed is also changing in the markets.
So it looks as though the ECB will hike before the Fed, well before the Fed. So from that point of view, it would be supportive for the euro and less supportive for the dollar on that parity, if you like. Markets are currently pricing probably about two rate hikes from the central bank this year, from the ECB. If we look ahead, then this could change very dramatically. Obviously, if Strait of Hormuz is not opened, a lot of governments everywhere in this world are taking measures to cut inflation by dealing with fuel prices, removing certain taxes, etc. So we do see governments working with central banks or supporting the central bank policy backdrop there. As we move ahead, I think the biggest risk for the ECB is waiting too long. So we could see more aggressive monetary policy stance from the ECB, because if we look back to 2022, then the ECB actually waited too long to hike. And we saw inflation in Europe actually increase much faster and more than in other countries, like the United States, for example. So they don't want to be behind the curve this time.
Mm-hmm. So what will ECB do and what will Fed do under new Warsh government? What do you think we will be talking more about in the second half of this year in terms of Fed and ECB and euro dollar parity?
The aim of a central bank, it depends actually. All of them have different policy aims, whether it's to deal with unemployment or inflation or the economy as a whole, and it depends on their mandate. But still, inflation and keeping inflation expectations at bay is one of the most important, if not the most important, policy aim of any central bank. So I think the Fed, we could see surprises on the hawkish side, even when there's a change of the leadership, because there's no point in risking inflation going off at a tangent, because if you don't deal with it now, you're going to have to deal with it at a later stage and hike rates even more. So I think that's the first thing. And from the ECB, 2 rate hikes, as I mentioned before, expected. From the Fed, 1 this year. I think the risk is that this can rise to the upside. And probably the best thing is for the central banks to react quickly now to keep inflation expectations lower and to show that the central banks are in charge of this.
Mm-hmm. Simon, which indicator are you personally watching most closely right now? Oil prices, bond yields, inflation expectations, FX markets, or credit spreads? What do you watch?
I think probably bond yields, so long-term bond yields in Europe and the United States, and obviously expectations of any Fed rate hikes. I think those are the 2 most important things, and especially for emerging markets and central banks there.
Mm-hmm.
And when I say, we can have a shock hike soon, this would also increase the likelihood of rate cuts further down the line in about 6 months' time everywhere, if the Strait of Hormuz has been opened, and then we start to see these one-off effects playing, and then inflation expectations fall, and then year-on-year inflation falling again over the next 12 months.
We're coming towards the end. What are your expectations in terms of growth for the world economy? The strength of dollar in the year end, what do you expect?
Again, this will be a very dynamic situation, depending on what happens Strait of Hormuz. We've had already cuts in growth expectations from the IMF and other institutions. Those expectations could be cut again if the Strait, not only could be, but I think would be cut again if the Strait of Hormuz doesn't open over the next 1 month. And then we see also inflation forecasts increase as we move ahead over the next 1 to 2 months. So I think that's the general picture as far as we can see.
Mm-hmm. Towards the end of this year, for example, do you expect new gray swans or black swans in the second half of the year in the markets? What do you say?
Well, I hope we see some beautiful swans come out by the end of this year, as I am personally an optimist, and we have to remain optimistic. That none of us can drive what happens out there, and very few politicians or leaders can actually drive this. So I think the likelihood is less of a gray or black swan, but more of a graceful swan as we move ahead.
Mm-hmm. Okay, economist Simon Quijano Evans, thanks for joining our program and making this time for our program.
Thank you very much.